Increasing inflation levels have put U.S. real estate investment trusts, REITs, in the spotlight. These trusts distribute 90% of their annual taxable income as dividend payments, providing a reliable source of liquidity for investors. REITs are also an alternative way to own real estate without the hassle of buying and managing multiple physical properties. Therefore, many passive income seekers include them in long-term portfolios. Today's article introduces 3 exchange-traded funds, ETFs, that could appeal to a range of readers. 1 First Trust S&P REIT Index Fund. Current price, $30.31. 52-week range, $24.57, $32.83. Dividend yield, 1.55%. Expense ratio, 0.5% per year. Our first fund, the First Trust S&P REIT Index Fund, NYSE Friday, invests in a range of REITs in the U.S. The fund started trading in May 2008. Friday, which tracks the S&P US REIT Index, has 151 holdings. Specialized REITs, which typically include leisure facilities, such as movie theaters or casinos, outdoor advertising areas, or farmland, amount to 22.61% of the fund. Then come residential REITs, 20.01%, industrial REITs, 16.31%, and retail REITs, 14.17%, among others. The top 10 names in the portfolio account for close to 40% of $224.4 million in net assets. Leading holdings include the logistics and warehouse REIT Prologis, NYSE PLD, digital infrastructure name Equinix, Nasdaq EQIX, self-storage facilities REIT Public Storage, NYSE PSA, and shopping and entertainment REIT Simon Property, NYSE SPG. Buy and hold investors could regard the recent dip as an opportunity to buy into Friday. The ETF is down 7% this year but still up over 21.6% in the past 12 months. It also hit a record high in late December 2021. 2 Pacer Benchmark Data and Infrastructure Real Estate Sctr ETF. Current price, $37.88. 52-week range, $35.35, $43.50. Dividend yield, 1.37%. Expense ratio, 0.6% per year. Next up on our list is the Pacer Benchmark Data and Infrastructure Real Estate Sctr, NYSE SRVR, which exposes global REITs operating in the data and infrastructure sector. As data usage grows, there is more demand for networking equipment facilities. As a result, this niche fund has been getting significant attention lately. Since its inception in May 2018, assets under management have reached $1.3 billion. SRVR, which tracks the Kelly Data Center and Tech Infrastructure Index, has 24 holdings. The top 10 names comprise close to 3/4 of net assets. Around half of the REITs are classified as tech infrastructure, telecommunications. Then come data infrastructure REITs, 39.68%, followed by tech infrastructure, general REITs, 10.93%. American Tower, NYSE AMT, Equinix, Crown Castle International, NYSE CCI, and SBA Communications, Nasdaq SBAC, had the names on the roster. The fund is down 12.5% year-to-date but still up over 6% in the past 52 weeks. Like our previous fund, SRVR also saw an all-time high at the end of December 2021. We believe this segment of the REIT universe could belong in long-term portfolios. 3 Global X Super Dividend REIT ETF. Current price, $9.07. 52-week range, $8.43, $10.34. Dividend yield, 6.62%. Expense ratio, 0.58% per year. Our last fund for today, the Global X Super Dividend REIT ETF, Nasdaq Sret, invests in 30 high-yielding global REITs. The fund became available in March 2015, and net assets stand at $387.5 million. Sret gives access to mortgage rights, 38.35%, healthcare rights, 15.84%, and diversified rights, 15.81%, among others. Over half of these rights come from the US. Next, we see names from Singapore, Canada, and Australia. Australian Charter Hall Longwhale REIT, ASXCLW, Singapore-based Mapletree North Asia Commercial Trust, SIMAPE, Canadian Smart Centres Real Estate Investment Trust, OTC QIF, and Net Lease REIT WP Carey, NYSE-WPC, lead the names on the roster. Sret saw a 52-week high in June 2021. However, it has lost 4.6% since January and 3.5% in the past 12 months. Passive income seekers interested in global REITs should research the fund further.